So, have you ever walked into a really busy market, maybe? Or even just, navigated one of those complex online marketplaces and just wished you had a secret map?
Yeah, like a way to cut through all the noise,
Yeah,
right?
yeah.
Spot the actual good deals and just feel confident you're making the best call.
Exactly. Well, today we're diving into something that's kind of like that map. It's a powerful strategic framework. It's called the Observer-Participant Dialectic.
Sounds a bit academic, maybe, but it's actually really practical. It's basically this dual role you play. First, you analyze the market like an expert analyst almost,
Hmm.
and then you jump in and participate, but as a strategic actor, really aiming to optimize your outcomes.
That's the plan.
Yeah.
Our mission for this deep dive is really to give you the tools, the mindset to master pretty much any competitive market. Doesn't matter if it's super informal or highly structured.
And we'll show you how combining these two roles, observing and participating, helps you, well, mitigate risks, definitely maximize the value you get, and build some serious resilience.
And to make it really concrete for you, we're going to ground this whole discussion in a really fascinating place. The Marabastad phone market in Pretoria, South Africa. It's this incredible hub of informal trade.
It really is. And we'll be pulling in ideas from, basic microeconomics and behavioral economics, the psychology side of things, and even a bit of game theory.
So yeah, get ready. This could really transform how you approach, well, any transaction, really.
Exactly. So to really use this secret map effectively, we first need to understand the landscape, right? Lay that solid foundation.
Starting with the economics.
Yeah, but moving beyond those, let's say, textbook models that assume everyone's perfectly rational all the time. Because real-world markets, they're dynamic, they're complex ecosystems. You need strategies that adapt.
And what's really cool here, I think, is how success really hinges on having this dual perspective. You've got to be the observer first.
Right.
Like an objective analyst, just gathering clues, seeing what's going on, and then you step in as the participant, the strategic actor, making your move based on what you saw.
It's not one or the other. It's the combination, the synthesis, that's powerful.
And the key insight for you, listening. When you consciously switch between observing that market and then strategically acting within it, well, you're not just reacting anymore.
No, you're actively shaping your opportunities. You're turning what looks like market chaos into, well, something you can actually gain an advantage from. It's about being smart, not just hoping for good luck.
Okay, so let's start digging into Marabastad's structure. You mentioned it exemplifies what economists call monopolistic competition. Why should someone listening care about that term?
Well, it matters because it means even though you've got lots of sellers, they aren't all selling the exact same thing. You might find a proper branded phone right next to a generic one.
Or different warranty terms, maybe.
Exactly, or different conditions. The insight for the observer part of you is to spot these differences, because that's where the participant can find leverage, or maybe just find the thing that's the best fit for what they need beyond just the lowest price.
Right, it's not just about price. And demand for phones there, like lots of places, is usually pretty price sensitive, right? Economists call it elastic.
If the price jumps, people might wait, or they'll look somewhere else.
But what's also interesting is that supply is pretty elastic, too. It doesn't take much for someone to start selling phones there. Low barriers to entry.
Which means the power shifts around. When a hot new iPhone drops and it's scarce, the suppliers definitely have the power.
Yeah, they can charge a premium.
But when there are tons of alternatives, lots of similar phones around, suddenly the buyers are more in charge. So the observer is constantly scanning, trying to sense those shifts in power.
Okay, so that's the sort of economic skeleton. But markets, especially informal ones like Marabastad, aren't just numbers. There's a human element. Cognitive biases.
Oh, absolutely. Anchoring, for instance, you see it everywhere. Sellers throw out a high initial price, hoping it sticks in your mind.
So for our informed observer, what's the immediate counter? What do you do?
Data. Simple as that. Use data. Check online prices, benchmarks. You basically reset their anchor with reality. It's like saying, yeah, nice try, but I actually know the ballpark figure.
Got it. Okay, what else on the psychology front?
Well, building on that, another classic lever sellers pull is the scarcity heuristic, the lines, limited stock. This is the last one.
Creates that urgency.
Exactly. But in this spoot observer, they don't just swallow it. They take a quick look around, compare with other stalls. Often that last one mysteriously appears at 3 other places nearby.
Right. Okay, and then there's this big one, information asymmetry, the lemon market problem.
Yeah, that's a classic, where sellers just know more about the quality of what they're selling than the buyers do. So you worry you'll get stuck with a dud, a lemon.
Which can actually make it hard for good quality stuff to even stay in the market, weirdly enough. So how does our observer participant approach help tackle that?
In a place like Marabastad, it often comes down to reputation.
Yeah.
You observe. Which stalls always seem busy. Who has repeat customers? Or you rely on those informal networks, word of mouth, what people tell you. These trusted stalls, they build that confidence, bridging that information gap.
That makes a lot of sense. Very practical. Okay, let's shift gears a bit. Game theory. We actually see things like the prisoner's dilemma playing out, right?
Definitely. You might see suppliers trying to undercut each other, maybe hoping to grab market share, but risking a price war that hurts everyone.
And as a participant knowing this, you can sometimes, well, exploit it.
You can. You can skillfully, maybe carefully, play sellers off against each other. It's a bit like a strategic dance, like you said.
High-stakes market chess, maybe?
Something like that. And this is where bargaining power becomes so critical. And having your walk-away point.
Ah, yes. Knowing your absolute limit.
And stating it clearly. Something like, look, R850 is my maximum, otherwise I have to leave. That's a powerful move. It really tests how desperate the supplier is to make that sale. You can almost feel the shift when they realize you're serious and you know your limit.
You really can. Okay, so we know what the observer needs to look for. But how do you become this market detective? What's in the toolkit?
Well, part of it is structural analysis. You kind of need to map out the supply chain, at least mentally. Where are these phones coming from? Who are the wholesalers, the importers, the retailers?
Can you give us a really concrete example, like from Marabastad?
Sure. Think about a broken phone screen, say an iPhone screen. If you go to a standard retail repair shop, it might cost you, I don't know, or $2,000.
Okay.
But an observer who's done a bit of homework, mapped the chain, might know there are technicians right there in Marabastad or nearby who get parts much closer to the source. They might be able to fix it for, say, R800.
Wow, that's a huge difference.
Massive saving.
Yeah.
All from understanding those hidden pathways, essentially.
And you also need to think about regulations, right? Things like VAT on imports or those safety certifications like ICASA here in South Africa. That stuff impacts price too.
Definitely. It adds costs or limits what can be sold legally.
Mm.
So beyond the structure, there's behavioral mapping. Understanding the culture is key in informal markets.
How do things like trust networks or social proof, seeing a crowd, how does that play out for the observer?
Those trust networks, people who keep coming back to the same seller, and social proof, just seeing which stalls are consistently busy, those are really powerful signals.
Right.
In an informal setting especially, the observer sees where the activity is, where people seem comfortable returning and thinks, okay, there's probably a reason for that. It signals reliability.
Makes sense. So understanding how people behave is one layer. Another really interesting angle for the observer is timing, temporal arbitrage.
Yeah, basically recognizing that prices aren't static. They can dip during slow periods, like after the holidays when demand drops.
Or when a new model is just about to launch, maybe.
Exactly. The old models get discounted.
Yeah.
Just knowing those cycles can give you a big advantage if you can wait.
Which leads us nicely into data, making decisions based on actual data.
Absolutely critical for the observer. Price tracking is huge now. You've got apps like Price Check or checking online retailers like Jumia or Takealot. You walk in armed with real-time benchmarks.
So you're not guessing.
You're not guessing. And then there's what you might call signal decoding, learning to read the subtle cues.
Like what?
Well, for instance, a supplier suddenly offering free accessories, like throwing in a screen protector or a cheap case. What might that signal?
Maybe they're really keen to shift that particular phone. Desperate for the sale.
Precisely. They're trying to sweeten the deal because they need to move that stock. A sharp observer picks up on that hidden message, that potential weakness in the seller's position.
Okay, so you've done your homework, you've observed, you've gathered all this intel. Now it's time to switch hats. Enter the participant's playbook. Time for strategic action.
Right. And negotiation tactics are front and center here. Anchoring and framing again. Let's use that Samsung A54 example. Say it's R11,000 online, but the sticker price in Marabastad is R12,000. How does the participant use the online price?
You use it as your anchor, right? You mention it, well, I can get it for R11,000 on Takealot.
Exactly. You frame the negotiation around that lower verifiable figure. It immediately challenges their higher starting point and shifts the perceived value towards your side.
And psychological leverage matters too, doesn't it?
Oh, definitely. sometimes just expressing mild disinterest.
Yeah, like not seeming too eager, little pause, maybe look away thoughtfully.
Exactly. It can subtly weaken the supplier's position, makes
Hmm.
them think they might lose the sale altogether, so they might become more flexible.
It shifts the pressure.
Yeah.
Okay, what about managing risk? That seems crucial too.
Hugely. Diversification is one strategy. Sounds fancy, but it could just mean splitting your purchases.
How so?
Maybe buy the phone itself from one stall you trust for quality, but get the accessories, the case, the charger from another stall that specializes in those, maybe at a better price.
Ah, okay. So you're not putting all your eggs in one basket.
Pretty much.
Huh.
Spreading the risk. And related to that is contingency planning. Just basic budgeting sense, really.
Like setting aside a bit extra.
Yeah, maybe earmarking, say, 10% of your budget for unexpected stuff. Maybe a future repair, or maybe you find a slightly better deal later and need that flexibility. Just having buffer.
Good advice. And then network effects. Using the crowd.
Yeah, leveraging crowdsourced intelligence, checking community forums, maybe WhatsApp groups, or even just asking locals you trust, like maybe taxi drivers who are always around. They often know who's reputable.
Getting those inside recommendations.
Exactly. And this brings up a really important point. Exit strategies.
Knowing when to walk away and where to go next.
Crucial. The participant needs to have alternatives in mind. Maybe there's another market nearby or specific repair shops like, CBD cell phone repair. If a negotiation isn't going your way, you're not stuck.
It stops you from getting cornered or overcommitting.
And it gives you genuine power to walk away confidently because you know you have other viable options.
Okay, let's tie all these threads together. Let's walk through that Samsung A54 case study again, step by step, showing the observer-participant dialectic in action.
Sounds good. So the setup. A buyer wants a Samsung A54. Sticker price in Marabastad is R12,000. Our buyer's personal budget max is R10,000.
Okay, observer phase first. What do they do?
First, price comparison. They check online, finds it for R11,000. Then they scout Marabastad stalls. Prices range from R11,500 up to R12,500.
Okay.
Noted.
Then digging deeper.
Then supplier analysis. They notice stall A is offering a free screen protector. Okay, that's worth maybe R300 value. But they overhear or find out stall A has kind of poor reviews for after-sales help.
Right, a red flag maybe?
Could be. Stall B, meanwhile, seems solid, reliable reputation, but no freebies included. So you've got pros and cons for each.
Okay, observer phase complete. Now switch to participant. How do they negotiate?
Right. Armed with that intel, they go back to stall A, maybe because the potential deal seems better initially with the freebie. They start the negotiation using that R11,000 online price as their anchor.
Okay, setting the benchmark low.
Then they make an offer. Maybe R10,500 plus. They make sure that free screen protector is included. So the total value they're proposing is effectively R10,800, R10,500 cash, plus R300 value.
Which is still below the online price and, importantly, feels achievable given their observations.
Exactly. And critically, they have that walkaway threat ready. If stall A says no, or tries to haggle too hard, they're fully prepared to just say, okay, thanks, and pivot straight to stall B.
So what was the outcome in this scenario?
The outcome was actually a success. They managed to negotiate stall A down. They secured the phone for R10,200, and the seller even threw in a basic free case instead of just the screen protector.
Wow, even better than the initial target. How did that happen?
Well, the real insight, the leverage, probably came from recognizing a couple of things beyond just the price comparisons. Maybe it was late in the day, that temporal pressure.
The seller wanted to close one last sale.
Could be. Combined with the buyer knowing stall A had those iffy after-sales reviews. Stall A might have been more motivated to make an immediate cash sale, sweeten the deal, rather than risk the buyer walking.
So it wasn't just general competition, it was that specific observation about stall A's situation.
Exactly. That deeper observation allowed the participant to push for and get a really good outcome. It shows how the two roles work together.
That's a fantastic illustration. And obviously this whole framework, this observer-participant idea, it's not just about navigating informal phone markets in Pretoria, as interesting as Marabastad is.
No, not at all. It has much broader implications for you, the consumer, everywhere.
Right. This approach really empowers you to handle situations where information isn't perfect, which is, let's face it, most situations. It helps you extract maximum value, whether you're in an informal market, haggling online, maybe even negotiating a salary.
It transforms you from just being a passive browser or price taker into someone who's actively seeking and creating value for yourself.
And it works the other way too, right? For entrepreneurs, for suppliers.
Absolutely. Suppliers can actually flip this around. They can study buyer behavior, anticipate your observer tactics, and then adjust their own pricing, their product differentiation, maybe their negotiation style, turn your strategy into their opportunity.
Interesting. And for policymakers, people setting the rules.
Well, the insight there is pretty clear. Regulations that help reduce that information asymmetry, things like demanding clearer pricing, mandatory disclosures, maybe standardized warranties, they tend to foster markets that are fairer and, frankly, more efficient for everyone.
Oh.
Benefits buyers and ethical sellers alike.
So really, this observer-participant dialectic, it's less a specific technique and more a universal template for engaging with any market.
I think that's a great way to put it. By deliberately combining that rigorous analysis, the observation, with smart strategic action, the participation, you really can shift from being just a passive player reacting to the market to being an architect of your own economic outcomes.
So here's something to think about as we wrap up.
In this age of, complex global trade, online platforms, prices being set by algorithms, how can you apply this timeless framework? How can you turn all that complexity into your competitive advantage?
Not just when you're buying electronics, but in really any decision where understanding the dynamics and taking smart, strategic action can genuinely make a difference for you.